This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT, and you're listening to episode 80. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the microcap message. For this episode of the Planet MicroCap Podcast, I spoke with Maj Soueidan and Chris, Quoth the Raven Irons from geoinvesting.com. At geoinvesting.com, Maj, Chris, and the whole team there are studying the microcap market on a daily basis for their newsletter, looking at every news release, reading filings, etc. So I thought, who better to recap 2018 and look ahead at 2019 than Maj and Chris? The goal for this episode is to reflect on some themes in the capital markets that we recognized in 2018, as well as their thoughts on 2019. Thank you again for tuning in to episode 80, and please enjoy my interview with Maj Soueidan and Chris Irons from geoinvesting.com. But first, a word from our sponsor. To my loyal listeners, subscribers, and fans, Robert Kraft here, your host on the Planet MicroCap Podcast. The 2019 Investor Conference season is upon us. Where are you going this year? I'd like to take a second to invite you to join me and maybe a few of the guests you've heard on this podcast to our annual MicroCap Investor Conference, the Planet MicroCap Showcase, April 30th to May 2nd, 2019 at Bally's Hotel and Casino in Las Vegas. The Planet MicroCap Showcase will be 2.5 days of company presentations, networking opportunities, an educational workshop, and you will get to meet privately in one-on-one meetings with management of well-known emerging growth private and publicly traded microcap companies. We are back with new surprises and programming that you will not want to miss. So join us for the Planet MicroCap Showcase, April 30 to May 2nd, 2019 at Bally's Hotel and Casino in Las Vegas. For more information and register to attend, please visit www.planetmicrocapshowcase.com. See you in Vegas. For this episode of the Planet MicroCap Podcast, I would like to welcome Maj Soueidan and Chris Irons from geoinvesting.com. Maj and Chris, welcome back to the Planet MicroCap Podcast.
Thank you, Bobby. Yeah, it's awesome being here.
It's awesome to have you guys back, and thank you as always for joining me, and again, happy holidays. So,
congratulations on your wedding.
Thank you, man. I really appreciate that. So,
your Facebook picture, nice pictures.
Thanks. Yeah. So, I promise I will not flood the market with too many pictures. I know there is a demand now, but I don't want to oversupply. So with that. So with that, I want to start with each of your backgrounds, for those who don't know you or may not have heard some of our previous conversations. So, Maj, let's start with you.
Yes, Maj Soueidan, co-founder of GeoInvesting. It's a research site for mainly microcap companies, microcap stocks. We offer research to our retail investors through a platform, and as well as institutional investors through a different platform. I've been a full-time investor for almost 30 years now, really investing in the smaller capitalized companies. Really got my start from really reading Peter Lynch's book, One Up on Wall Street, and from there really fell in love with the craft and always trying to continue to become a better investor. And I think talking to people like you and people we meet through our website has helped us actually, help the team actually become better investors in general, because we meet some really nice, really smart people along the way who've had a lot of good war stories and experience to share with us. So I really enjoy that part of it.
And Chris?
Yeah, I'm Chris Irons. I started working for well. A lot of basically anything that's written that comes out of geo-investing crosses over my desk. So I do that. I do a little bit of equity analysis for them. Just kind of a jack of all trades. I'm coming up on 5 years working for Geo now, which is fantastic. My background is I worked for a small startup public company at one point for a couple of years. Implemented a investor relations program for them, which is where I kind of cut my teeth in terms of learning about public filings and learning about public reporting. Prior to that, I had worked for Apple and then did many years of schooling prior to that. So and I've been here for the last 5 years, learning a ton from Maj about microcap investing, which is something that I wasn't really specializing in prior. That I wasn't something that I was looking at every day, and so that's it. I handle anything that comes out of geo-investing that is written.
And Chris, I also have to congratulate you on your podcast that you launched this year. It's really, I very much enjoy it, and it's gotten a lot of success. So, for those who may not have heard your podcast, what's the name of it, and maybe give a little bit about it?
It's just called the Quoth the Raven Podcast, and it's basically just me downloading my thoughts on the market to a recorded file a couple times a week and just talking with investors that I find interesting. And a lot of it lately has been about Tesla and has been anti-Federal Reserve, which is my personally firmly held personal beliefs.
And then you should paraphrase your end of the world thoughts.
Right, not necessarily the beliefs of geo-investing or Maj, because Maj and I have different opinions on that, definitely. But yeah, thanks so much, man. It's been great.
Yeah. Well, I blame the end of the world thoughts on your geographical location, okay? If you're in California, it might be a different story.
I've been to California, and I'm not I like California at all. It's just not somewhere that I would want to live. Taxes are a little too high. It's a little too populated for me. But Maj probably know better than I do because he lives in Florida full time, right on the beach. Mm. He's probably got more of the California vibe. Yeah, that's probably why you're such an optimist, Maj.
True.
So
happier living.
So as of recording this, we're at the end of 2018. Every year I always like to do like an end of the year wrap up, kind of looking ahead to the next year. So I'd really love to get each of your takes on 2018, both at large in finance and investing, and then also in microcap specifically. So Maj, let's go to you first, and then Chris, your take.
Well, I think as usual, how I hoped or thought 18 would end up, it did not occur to be that way. So, and I think that look, I'm not really market timer, and really don't try to spend too much time predicting where markets are going to go. But I had hoped that there will be a little more love for the smaller capitalized companies coming into 18 and being sustained. I think we've had a problem over the last several years of micro caps and small caps sustaining rallies and sustaining broad rallies. And mainly the bull market over the last several years has been mainly big caps and larger cap companies. And I'd hoped 18 would signify maybe a better atmosphere for the kind of stocks I invest in. And it really didn't, occurred in pockets, but it really didn't sustain momentum. Now, the end of the year is they're actually performing worse than the larger counterparts. So that was pretty interesting. So, but what has happened though, as far as I'm concerned, is that there's so many companies still growing. There's still a lot of great companies putting out great earnings reports, just getting lost. They're just getting cheaper and cheaper every year. And at some point, still investing in the space, and I'm hoping that investors will start to recognize that value going into 2019. And I think what we're seeing here is finally a healthy situation where the market's really not going to be forgiven for companies with bad balance sheets, pump and dumps, any type of management teams that aren't really keeping their fiduciary responsibilities to investors. You're starting to see a lot of these stocks fall apart, even if they have interesting numbers and good value. If they're really not doing what's good for shareholders, I think that they're starting to really not perform well. And hopefully, when the market comes back again, or when that pendulum does swing, that a lot of these value companies, if you want to, micro cap companies, hopefully will lead some of the rally going forward. You're starting to see that a little bit too. I'm starting to see a lot, actually, OTC companies on the OTC really holding themselves well, really not being affected by a lot of turbulence, and that's kind of what you want when you invest in this sector. You want that non-correlation. And what I've noticed is these smaller capitalized companies on the OTC versus even the NASDAQ are performing, or list exchanges are performing much differently and behaving much more favorably.
So Maj, I wanted to just real quick, Chris, before I ask you, your take. Maj, you said that you've been seeing that microcaps have been performing worse than even some of the large caps out there and bigger names in the market. So what's some of the reasoning? Is it typical reasoning where there's a fear in the market, people tend to sell their microcaps first or more risky investments? I mean, what's your take on the reasoning there?
There's a lot of things. You can always speculate, but there's so much going on right now. Not just from what's going on with the market in terms of the turbulence there, but you have a lot of things, even regulatory-wise. I mean, I think the SEC was throwing around some type of roundtable discussion regarding regulation in the OTC companies. You have that could make it harder to buy them. You have situations where some brokerage firms, like I think Merrill, is limiting the ability to buy and sell these companies. So a lot of maybe clients are selling their stocks at those firms. So you have just a really bad environment, and you still have a lot of what happened since 2008, where you have less investors just playing in the space, and so you have less people searching for these companies. And then you have the proliferance of index funds and ETFs still being dominating investor capital. I think that just made the situation worse, and I was really surprised at how the violent pullbacks. We had a lot of microcap companies. I thought someone would hold it better, but kind of what you saw too, though, Bobby, over the last several years, you saw a lot of low quality microcaps go up a lot and just pump real hard, and a lot of them are just getting destroyed now. So that's kind of magnifying the effect of the pullback, I think, in the space.
Gotcha. In any sectors in particular, or just it's kind of onesies and twosies across the board?
It's pretty broad, man. There's companies that are recession resistant that we follow, and proof that are getting hit. Maybe not as hard, but yeah, I think it just eventually you become somewhat correlated with the market when it gets hit this hard.
And then Chris, what?
I think that comes with bad balance sheets, with higher debt. Regardless of industry, are getting clipped here pretty badly.
Right. And Chris, what have you been seeing in 2018? I mean, what were some of the trends that you've been tracking, and are you seeing similar things as what Maj has been seeing?
I think Maj definitely has his finger on the pulse of the microcap universe a lot more than I do. Certainly from a much broader perspective, I'm not surprised that the market has sold off the way that it has over the last 3 months. I could go as far as to go back 10 years and say that we never really have had a proper recovery anywhere in any space, which would be the argument that I would kind of make. Maj mentioned companies with bad balance sheets. I think there are, it's difficult to kind of throw a dart at any of the major indices and find a company that isn't levered right now. In addition to that, I think there's copious amounts of debt outstanding pretty much everywhere, not just at corporations, but consumer debt, student loan debt, personal debt, municipal debt. It's perverse right now. As it relates to the microcap space, so just to stay on macro for 1 second, I'm not really surprised that the market's pulled back. And, Maj and I were talking a couple of days ago that I think what's going to happen, if you had to ask me what my outlook was for 2019, I would say we're going to enter kind of a stock picker's market here. I'm not especially bullish really ever, but right now I'm not especially bullish on 2019. I don't think it's going to be, back to and eclipsing all-time highs next year. I think the market will. On the other hand, I don't think we'll probably drop 50% next year. I think we'll probably, I do think the market will probably stay a little bit stagnant, give or take probably a delta of maybe, 10%, I'll say. But Maj and I were talking the other day, kind of about how we believe this to be a stock picker's market, which means over the last 10 years, you've seen active managers kind of underperform passive managers. This is kind of be the time where stock picking matters again, where value matters again on the long side, where, companies that are prospective short candidates as well, that maybe they've been able to keep the narrative going over the last year, are finally going to hit that impasse where they kind of have to put up or shut up, where they're going to have to pay the piper. And as it relates to the microcap space, again, Maj probably has a better, broader kind of pulse on the microcap space, but what I'll say is one of the things that I've learned from Maj over the last 4 or 5 years about why the microcap space is so great is because it does a lot of times operate with this non-correlation to the broader market. So there's not, it's not a beta trade being invested in microcaps. Yes, some will pull back when the market pulls back. Some will rise when the market rises. But for the most part, a lot of microcap companies seem to me at least to be relatively uncorrelated to the broader market. And that's where Maj's strategies, which basically what I've learned from him over the last 5 years, is how to get a feel for management, how to go very, very deep on companies, how to kind of figure out these undiscovered little information arbitrage opportunities that you get from these stocks that don't have a lot of analyst coverage, that aren't, on CNBC every day. I think that kind of stuff's going to come in very handy in the year to come. As there has always been some bargains in the microcap space, I think we'll probably see a little bit more now that the broader market has pulled back. But I think that skill set's going to come in useful, and I haven't really talked to Maj about this, but I wouldn't be surprised to see him applying that thought process even to some larger companies that may have actually gotten hit as a result of the market pullback today. For instance, we took a very, very, very small and very, very speculative shot at Goldman Sachs, which is not a name that we would normally take a look at, but its tangible book value was below where it was during the worst of the 2008 crisis. And so when I ran the idea by Maj, and we discussed it, we took a very small swing at it. And I think Maj can correct me if I'm wrong, but I think going forward, if the market kind of stays in the stock pickers kind of sentiment, that might be something that we may look at going forward. But Maj, you can correct me if I'm wrong.
Yeah, it's true. When I started investing in stocks, I wasn't only in the microcap sector. I would go, medium to even large cap. So, one of the issues that we had here over the last several years, we just couldn't find value in those larger cap companies. They were,
right.
They were going up, but it wasn't. We just didn't believe they had a lot of them should be going up, and now they're correcting somewhat. So, we'll go. What we do, works on every, at every level in the market. And if we can find really cheap companies that have been punished too severely, that are larger firm companies, we'll buy them.
So,
and I just couldn't find them, And maybe now as the stock picking process picks up for us, I think we'll be able to find more value in that area, maybe. I just think that. But you made a great point about the stock picking thing, and I think that's what hasn't been the case over the last several years. It hasn't really been a stock picking market, and people haven't been rewarded for being great stock pickers across a broad portfolio. So I'm really excited about that opportunity right now, and at some point that's really going to really pay off big for us, I think. And I just really excited about that going forward. I'm glad you brought that up.
I actually want to follow up on that, because for some people, especially that listen to this podcast, I'd say most of them probably don't buy ETFs. They usually tend to focus on individual names. So, there might be one person who was like, that I only kind of am a stock picker versus someone that, maybe newer and has maybe dabbled in some ETFs. I mean, what are some of the characteristics you would say of a market that's more, I guess you'd say, passive versus more of an active stock picking type situation?
Well, look, I think when the market's going up, everyone loves these passive funds, or passive investing, ETFs. So it becomes unnecessary to be a stock picker necessarily because everything's going up. It's and eventually, the market becomes the market. I mean, you earn the returns of the market, and if we're going to go into a situation where market returns aren't sufficient for investors to take risk, we're going to have no option but to stock pick and to start looking at money managers who can hopefully, become good stock pickers, who are good stock pickers and beat the market. And that's what could happen. So a lot of it's on the performance of the market. I mean, you didn't have to do anything. You could just be, you could just, like Chris, throwing darts, and any index or any ETF really done well across a broad spectrum of them.
Right, well,
and I think eventually become spoiled along that line.
Mm-hmm. Well, here's a thought that just came to mind, and this could be a very dumb question, so forgive me if it's a dumb question, but
there's never dumb questions, dumb answers. So.
Well, actually, yeah, and so my question really is, if you made the point earlier that microcaps are largely uncorrelated to the market, but if everything's going up or the market's doing well, I'd have to ask, well, okay, if it's uncorrelated, but it's only correlated when it goes up, how is it not correlated then when it goes down? How does that make sense?
Well, let me. I guess in theory they're uncorrelated, right? Mm-hmm. And that can be, also it can be an advantage when the market's going down, but it also can be a disadvantage when the market's going up because they may not follow that suit also. Right. You had a lot of things going on with the microcaps. Now, not only are they uncorrelated with the market, but when you have a situation where there's less demand for them and less people searching for them, and because of the dynamics we talked about earlier, sometimes they don't move at all, regardless. And I think they become more correlated in general when the market is going down. Though you have a lot of that. At some point, correlation matters when it gets really more when there's fear in the market. But you see that, you're seeing that right now amongst a lot of the lower quality companies in that space. Mm-hmm. But I think that in general, you can't make a broad statement all the time about that. But I think that correlation matters at some point. More to the downside, at least that's been the case with these microcaps in the lower quality sector of that area.
So you also brought up actually a little earlier about regulation and how there's going to be this, and I think you said something about an SEC roundtable and for OTC companies. I mean, everyone expects usually with the Republican presidency and government, rolling back regulations, especially when the market's doing well, it kind of spurs a more positive environment. Some would say, so can you comment a little bit more about that and that point that you were making a little bit earlier?
Well, I mean, when I was, I think actually Raven will have some opinion on that more than I will, but I just think it's become regulation has made it harder for a lot of people to participate in the market, in the microcap market, anywhere from the retail investor all the way up to the institutional investor. Mm-hmm. So but in some respect though, it's good for stock pickers who still are involved in that area because there's more value for us. Mm-hmm. And if you believe like we do that eventually that value will win out, at some point you will be rewarded.
Okay.
But on the topic of regulation, is all you hear right now in the media is recession. Things are getting bad. We're going to get bad. And when you have Kramer on TV talking about he's interviewing these large cap companies and they're telling them bad things. Watch out. But of course they're larger companies. They have a hard time growing in general. And we're looking at these smaller cap companies that we're talking to, and they're not really getting effective. They're not sending the same message to us. That's interesting. Mm-hmm. But one thing on the regulatory topic is that the banking regulation has been I think early this year were relaxed or repealed for some of the smaller banks. The larger banks still have to abide by some of the rules that were put in place after the Great Recession. So that's an interesting current that no one's really talking about. That I think that's going to help. That could help the economy as it loosens lending standards and allows these smaller companies to have better access to capital, mm-hmm. which could benefit a lot of the smaller companies that we follow.
Mm-hmm. All right, Raven, what's your take?
Yeah, so I guess I'll start with regulation, and then just try to go from there. I think too much regulation is a problem, and it's annoying. I think we need some regulation. I think obviously we need, a basis to keep everybody on a level playing field. So, I think holding all public companies to the same standards is not a bad idea. I think that's a good idea. I think public filing standards are a good idea, not a bad idea. I think, probably some of the base layers of regulations for banks are a good idea. For investment banks are a good idea. I'm not completely 100% anti-regulation. I understand it, even though I am kind of a libertarian, so my view is further towards, less regulation and allowing those who thrive to thrive and allowing those who fail to fail, which is not what we do in this country. We privatize gains and we socialize losses. With that being said, I think there is a litany of regulation that is just probably suffocating the market, and to some degree, I think specific to microcaps, like Maj is saying, I think there are ridiculous regulations, like institutions not allowing clients to buy microcap companies under a certain dollar amount. You can't buy stocks under $5. Like, what is that? Like, it has anything to do with the company's valuation? Like, it has anything to do with how well they're run or how reputable they are or how credible management is? It's the stupidest thing in history. Of course, doesn't surprise me. Government has a lot of stupid regulations, like, the pattern day trade rule. It doesn't make any sense to me. To this day, when I was first starting out as an investor, it was something like, I never even understood it. Like, well, what's the big deal? Like, it's my money. If I want to make a trade, I can make a trade. It's like, oh, we got to save you from yourself. Even just recently, last year, I made, or 2 years ago rather, when I was renovating this house that I had just bought, and I had transferred a bunch of money from my savings to my checking a couple times. And after I did that, like 6 times in a month, they sent me a letter. They're like, you're not allowed to do this. The federal government says you can't move money from your savings account more than 6 times in a month. I'm like, this is the stupidest thing I have ever heard of in my life. Now take those types of stupid regulations, which to anybody listening to this is thinking to themselves, it doesn't really make any sense from a common sense standpoint. It's ridiculous. It's insane. And just blow those up on a on a macrocosm level and slap them on the capital markets. And we have a lot of regulations that are probably very similar in the respect that, from a common sense standpoint, they don't make a lot of sense.
So why?
And what Maj is talking about here, limiting people from buying microcap stocks, I think is ridiculous. Look, to some degree there needs to be regulation, but the government can't micromanage trying to save everybody from themselves all the time. I think it does a hell of a lot more harm than good.
So they regulate. There's so many areas that should be regulated that aren't regulated, and there's areas that are regulated that
right.
It's ridiculous. I mean, it's like, I remember when last year we were trying to buy a stock, and we couldn't buy it online because it had this little fraud alert on it or whatever. I'm like, okay, well, this is definitely not a fraud I'm buying here. I know it. So I called the brokerage firm up. I said, what's going on here? Well, it's on our fraud list because of lack of volume. Well, that's like, but I can buy Riot all day long.
Yeah, right. Exactly.
It's amazing is that basically these OTC stocks, these that nobody wants, that no one's buying, because they're not fraud, they're not pump and dump stocks, they're not getting promotional, material sent out all day long. Those are the stocks that are being punished through regulation. But you can all day long buy pump and dumps. You can all day long do reverse splits that maintain listed. You can all day long get extensions on your filings. It's crazy.
You can buy mega cap pyramid schemes on the New York Stock Exchange. You know what I mean? Like full on pyramid schemes. You can invest
reporting companies.
You can invest in companies that have tons of debt, that have never generated a cent of free cash in their life, that have tapped the capital markets for decades to stay afloat. You can invest in biotech companies that have no revenue stream, have never generated cash,
and they're Reg A plus.
that over the course of decades have depreciated in value 99%. But because, like Maj is saying, this one company has a lack of volume, somehow in some moron's office somewhere, that lack of volume equates to, the company's a fraud. And this is the kind of stupid shit that just happens across the market. I just think Maj makes a great point.
So what can be done? Like, how? By the way, sorry, real quick, before I stop the flow, because it's really good. Real quick, Are you guys shareholders in Riot? I just have to clarify.
Ah, come on, no, no, I'm not. No. I guess I wish I was when I went to 100.
But Dennis Gartman went out and bought Riot. Okay, Dennis Gartman is supposed to be some seasoned market professional. They roll this guy out onto CNBC every week. They refer to him as the commodities king. He's got a subscription newsletter that he charges money for, that he has a lot of subscribers for. Okay, Riot, to everybody that knows who Barry Honig is, knows that at the very least is a company maybe they should be a little bit skeptical of. When you change your name from a biotech company to a blockchain company the same week that everybody else is doing it, because blockchain happens to be the number one thing in the news, that should be your first clue. Maybe if they're able to take a business and pivot it like this, it wasn't really a business to begin with. Anybody who did 7 seconds of research on that company from the get-go should have been skeptical on it. But instead we get a market commentator who's supposed to be one of the leading voices in the mainstream media, Dennis Gartman, comes out and he buys the thing. And then, when he gets blindsided on it after CNBC does think of how bad your company has to be for CNBC to do an expose on it. I mean, they do what, one expose every 5 years or something? Then after that, he's got to write this letter like, I could have never seen this coming. It's like, are you kidding me? And then Maj can't go out and buy a company that has no volume, a microcap company where he's been to the premises, he sees that it's he sees it's a legit company. They're consistently generating cash just because they don't trade 10,000 shares a day or 100,000 shares a day or whatever the threshold is. That's insane.
So what can
I remember a time where all you really saw, was, even though stocks split mean nothing to valuation, but it was really a time when I was investing in the 90s and some of the 2000 area and early 2000s where, a forward stock split was the norm. Stocks goes up, split 2 for 1, whatever, and that was a lot of what was happening. Now it's all about the reverse split to maintain listing. And then the exchanges will continue to allow a company to do multiple reverse splits over so many, continually to stay listed. There's no rule, or issue stock or make a bogus acquisition to maintain your equity levels so you can maintain listing. All these basically these exchanges just want to make money. And the only companies that really are going public anymore. Now you have even the Reg A kind of plus platform. There's all these ridiculously uninvestable companies, and that the exchanges don't care. They just want their fees. Right. And if they were really to put enact good regulation, a lot of these companies couldn't trade and they wouldn't collect their fees. Not enough quality firms want to go public anymore.
Yeah, Maj is 100% right. And when you look at Helios and Madison's a great example. Is the first one that pops to my mind.
Wait, real quick, are you shareholder? Hold on, real quick, Chris. Before you talk about that one, are you a shareholder or were a shareholder ever? Just need to clarify.
And what?
Yeah.
Fuck no! Oh my God, no! Maj would fire me if I said yes to that.
Yeah.
So I have to ask.
I didn't mean to interrupt you.
No, you were making a point. Go ahead. I'm sorry.
I was just saying that, and like dry ships, and that GBSN that we followed for a while. They're all perfect examples of these companies.
Oh, GBSN was ridiculous, right? Yeah.
Split.
Yeah. Yeah. It's just I just didn't think I would ever see that, and what's happening? A lot of stocks I buy right now in the microcap area are just stocks I knew years and years ago from just all these decades of investing in these companies, like old school companies that I come around to again. Mm-hmm. There really aren't many of these, even new reverse mergers or IPOs I'm investing in, and I'm afraid that at some point you're going to have this graveyard of just. The NASDAQ is going to be a graveyard of bad companies, 10 years from now that are uninvestable. Mm-hmm. And that over time that, the great companies are either going to maybe, delist to the OTC, which I have no problem in doing, or maybe get acquired. Mm-hmm. And that's okay too. Well, I'm not trying to find something dramatic all here. It is the end of the world. I mean, there's certainly always going to be value there, but I just don't like how the markets have transformed over the years.
No, it's an important topic. It's an important topic. I've talked about this same subject with Chris Lahiji on here a couple times now, and this idea of there not being enough, new quality names that are going public. I mean, in your guys' opinion, I mean, is it regulation or what is it that's stopping some of these companies from going public as microcaps?
Well, I think part of it is just reputation-wise. I mean, look, if there's enough of these fraudulent companies out there going, why do you even want to be part of that? And it's also look, everything's changed too. You have Seeking Alpha now. You have a lot more checks and balances in the market where you have to be careful. And as a company that wants to go public, you got to realize, hey, well, if I go public with these 3 or 4 risk factors, which really isn't fraudulent, but it's risk factors, it's insurers are going to come out there and write about it too. So it's not just regulation; it's a lot of stuff going on. Mm-hmm. Besides that too, I think. But look, as far as what regulators could do, and they could definitely put things in place. You can only reverse split so many times. You can only do the reverse merger so many times before you got to take it. But there's things they can do. I mean, the SEC has the ability to deregister a company stock.
Mm-hmm. And Maj, just going back to some of the earlier work you did, in 2008 to 2009, 2010, with going in and looking at identifying a bunch of these Chinese-listed or Chinese-based U.S.-listed frauds. You guys were exposing them and putting out reports on them one after the other, and it doesn't seem to have made any impact. And these were bona fide frauds, right? Like the building.
Like 14 of them. Yeah.
Right? Right, exactly, right? It wasn't like they weren't on the line or anything. And it just doesn't appear as though the exchanges have done anything to rectify that going forward.
It's gotten worse. It's gotten worse. If you look at some of these stocks that have some short pieces on it are pretty compelling. I'm not going to list any symbols here right now. There would have between 2010 and 14, they would have been halted, delisted by now.
Right.
And now they're just the regulators just letting these things trade, letting the market take care of it, which isn't horrible to some degree, but at some point they have a responsibility to protect investors. And the regulators they're in a tough spot because when you have these short pieces come out, or you have to worry, they have to worry about we don't want to get sued by these companies if the short piece is wrong, and they're just understaffed. They have to go and prove all the stuff. So if we're writing a short piece, we know it's a fraud. That's all we're really working on. To have to take at face value that regulators have to believe us, is probably a little overstretched too, far stretched too. There, so we have to they're probably understaffed. There is a lot of probably legal mumbo jumbo they got to go through and worried about before they go that route. And I'm hoping that eventually the swindling goes back to what it was between 2010 and 14. I remember at that point in time when we were writing those short pieces, even on U.S. pump and dump stocks, we weren't short. I was never short of stocks until the reverse merger with China thing came along, and then along that process, I started doing a little more research on just U.S. names, domestic names, and we started writing reports on pump and dump stocks too, exposing them also. So we got a lot of exposure to it. But one thing I remember that we said, amongst ourselves, hey, this 2010 to 14 thing is never going to happen again. And because there was really no punishment levied against some of these, these China management teams in China, they're happening again. We're seeing it again. We're seeing just brazen fraud in some of these IPOs that are coming public right now from the China side. They're not even hiding it because they don't get in trouble. And if they do get in trouble, you can't get the money. You can't collect the money. There's
zero repercussions for them.
There's got to be some better layer, of standard. Unfortunately, a different standard. I think for some of these foreign companies to come and list here, a different standard maybe for reverse mergers. I don't know how you do it in a capitalist society, right? But how do you do that? But there has to be something. So, if the SEC and regulators say, okay, well, Chinese companies need a different standard to go public, well, then you might have a problem, a legal problem, right? Well, why are you singling us out? So, I don't know what the solution is, but I know what it should be in some of these areas, but I don't know how you would implement it legally, how they would do it.
The insane thing, Bob, is when you learn that just because a company is listed on the New York Stock Exchange and just because they have an audit signed off by one of the big four auditors, it doesn't mean that anybody from either of those two corporations has ever, dove deep into the books. It doesn't mean, if you're listed on the New York Stock Exchange's diligence on a company, like, for instance, one of these U.S.-listed China-based company, is not comprehensive enough for them to catch what we were able to catch with, ostensibly less resources than them, and certainly probably less capital than them, but just making it our focus for a month, or making it our focus for 2 months, or however long we work on the project. So it's not as if they're so hidden that they can't be found. I mean, we work out of a small shop out in rural Pennsylvania. We're not even on Wall Street. We're an off Wall Street firm. Mm-hmm. So I think
regulators should hire us. Right. Regulators should hire us to do there should be a level of independent.
That's not a bad idea, or right, because when you slap the listing on a company or you slap an audit on a company, it gives them an air of credibility. And it's just, I've worked at a public company that's undergone an audit. It was always kids that were 21, 22, recent college graduates there. If you work for Ernst & Young or you work for PwC, you know exactly what I'm talking about. To some degree, parts of the audit are handed to the auditors from the company. And I don't think people understand that. Meanwhile, Maj can't make 6 transfers in and out of his savings account in a month. Do you understand why this is absolute insanity?
Bob, let me give you a great example. Bobby. Back in 2010 to 14 areas, there was this company, UE International. The stock symbol was YUII. And before you ask, I was long at one point when I thought, all these Chinese stocks have value. But then we eventually went short it when we found out it was a fraud. But part of the fraud we found just reading the SEC filings. In one of its 10Ks, in one of the risk factors or maybe the liquidity section, it talked about how the company allows money that comes into the company either through money raises or however revenue generated at the company. They allow the chairman, I think it was the chairman or one of the executives, to deposit the money in his own bank account. I mean, that's in the filing. And I couldn't believe we'll never see that again. I couldn't believe we saw that. And that was how is that even allowed? I mean, especially auditors aren't even reading these filings. I mean, there's no way the auditor should have allowed that to happen. Allowed that statement to say that this can't happen. This is just wrong. And basically, what from the filing company's point of view, like, look, we disclosed it already, so we're okay. They should have known the risk was there. And this is how ridiculous some of this stuff is.
I mean,
and all you have to do is open a 10K. I mean, there are companies out there with risk factors in their 10Ks right now that are just as egregious. And I have a thing hanging up in my office, Maj. I don't know if you've seen it, but at one point, one of these Chinese companies had to file an 8K, and I had taken part of the 8K out and printed it out from my office. And I'm looking at it right now because it literally says the board of directors of the company wishes to inform the shareholders of the company that on December 4th, a truck loaded with, among all other things, all financial documents of the group for the last 4 financial years were stolen in the Qinghai district of Hubei province, China, while the truck driver was taking a lunch break on his journey to transport the now titled lost documents back to the group's head office in Beijing. Like, this is the kind of shit that gets filed in actual SEC filings. But like in Maj's case, what he's talking about, that's even more egregious because somebody had, ostensibly, you would think somebody would have to review that filing before they would list this company, right? Mm-hmm. So one of 2 things happened. Either nobody caught it, which is ridiculous, or somebody read that risk factor where it was like, the chairman can put money in his own bank account, and they were like, "Yeah, this seems okay." Yeah.
When is that okay ever? So I don't mean to pick on China there. I mean, that whole period opened our eyes to, hey, there's just a lot of this going on in the U.S. too.
Yeah.
Right.
So I think more than ever right now, Bobby, especially in the microcap sector or space, you really got to be a better stock picker than ever. You need to dive deeper into what you're, into the filings, into your research, and find ways to really use strategies where you can gain more confidence in what you're doing. Mm-hmm. number one, a lot of it because it just takes a lot longer for companies, smaller capitalized companies, to realize the value you think you found. So you're going to have to hold these stocks longer term than you probably anticipated. There was, when I first started investing, a lot, there was a cookie cutter approach you could use to investing, and you look at a stock, you hear, this is what I think it's worth, this is what I think it's going to be worth by this time, and it would kind of work really nicely. Mm-hmm. But now holding periods have had to be longer now, and because of that, your research has to be a lot better and tighter.
Yeah, I was going to say, it just seems nowadays there's this interesting gap where, on one hand, let's say a listener is hearing this interview and they're like, okay, cool, Maj, Chris, got it. Like, I'll do more research and really dig into the SEC filings. But then they end up, let's say they find a company that they're like, okay, I think this might be a potentially investable idea. They spend, let's say 10 hours doing some research on it, going through the filings. The next thing they know, they're like, oh man, the truck fell over with all the filings in it and there was a fire and damn, like I just spent all that time on this and it ends up being a frog, and now they have to do that whole process again. It seems that there's, it's not like it was in the 90s, like you just said, where it was maybe a little bit, I don't want to say easier because it's not easy by any means, but it seemed a little bit more streamlined. And now there's this gap where it's like, okay, now there's you need to hold longer, but you also have to do tighter research, which means, more time that you now have to put into this. And, to the lay investors, some people don't have that, that extra time to do it. And yet at the same time, now we're going into a stock picker's market where, it might not be as advantageous to be passive. There's some confluence of factors that, you're just like, oh man, the world is ending. I'm joking, but you know what I'm saying?
Well, look, Bobby, I think that on one light, things have changed, but another factor here, we have a lot. Investors have a lot more information available to themselves now. So you have to have to use it, I guess. And if I was like an investor getting started in the space right now and understanding what's going on, and I want to kind of gain more confidence in how I'm investing and gain these edges, a really simple thing is. One of these things right now is look at these Form 4 insider purchases. Mm-hmm. Follow the insiders, especially right now. You want to find these management teams that are really backing the truck up right now and telling you that everything's going to be okay. And we've seen a really big pickup in the insider buying going on in a lot of these MicroCap companies that have been decimated in the last several weeks here. Mm-hmm. That's really important. The other thing I tell investors, like, you know what, if a beginner investor comes to me and talks to me, hey, how would I get started in this thing? And just start reading these press releases and reading conference call transcripts and seeing if there's stuff in the conference call transcripts there are not in the press releases that are giving you hints of what's going on that the market hasn't picked up on yet.
Well, what are some things that you look for in the filings and in press releases? And let's say times like these right now, where as you guys said, it is you think it's more of a stock picker's market. So what are some trends or things that you want to see in press releases and SEC filings that are signals to you that this might be a potential investable idea? You already mentioned about insider buying. I mean, maybe expand upon that and if there's some other things too.
Sure. So we're writing an article right now about insider buying. It's a follow-up to our part 2 to a Form 4 article we wrote a few months ago. And it talks about how we used it to find a company. So, investing isn't. Everybody wants a cookie cutter process. How to get a process, but it's more about a scenario analysis. You learn about how to invest through scenario analysis. And that's how you really learn. Because the steps for company, company A, could be different steps you take for company B. So, learn by scenario analysis. So in the situation that happened recently. We came across this company. It was a Form 4 filing. It was a huge purchase, and we found out, oh, wow, this company, it's the first time the CEO company bought stock, I think, like in 15 years. Actually, it's going public or something like that. And it was a huge purchase. So the stock went from like $3 to $4 over time. Like over 3 weeks, you had time to buy it. So things like that. You're looking for these small pockets of information that the market really hasn't caught up on and digging deeper and deeper. If I was reading conference call transfers, for example, it's just not complicated. It's not this Ivy League strategy. It's really simple and almost embarrassing, but it's just investing should be simple. So if I'm looking at a company that reported earnings today that's down to maybe 10-15% because they missed a quarter, because of they really don't go deep. They don't maybe go deep, do a deep dive in their press release of why the quarter was bad or whatever. Then you go to the conference call transcript or you listen to the conference call live. They talk about, hey, it was a delayed contract. We're going to get it in the next quarter. Things like that. Just simple things like that to kind of okay, this might be an interesting entry price. Do some quick analysis to get an idea what's going on, because you got to be quick sometimes in these situations. But this thing, these are just small little things in investing that can really give you, edges and alpha over time. And you're just looking. It's just that simple. You're looking for, in that example, you're just looking for stuff that's in these conference calls, even on the negative side too. That's not in these non-press releases. And it's by reading every press release. We'll read almost every press release that comes out on the microcap sector, and then if there's a conference call transcript, we'll go try and read those too and see if we find anything different in them. And you see that a lot. You see this divergence a lot more in the smaller companies than you do in larger companies. And even if there is a difference in when larger companies do it, the market's going to catch up with that pretty quickly. But there's some right now, because the interest in small caps, microcaps are at these all-time lows, in my opinion. You go on some of these conference calls, you might be the only person on this conference call. The only person to get this wonderful information that no one else is hearing yet.
Yep.
And it's an amazing opportunity for the small investor, or the retail investor, individual investor, to really capitalize on and get an edge on. And it just amazes me how many people don't do that. And that's how somebody with not a lot of time to invest can really start using these little tools like that and these little strategies to save time. If you don't want to read every press release, if you don't want to read every filing, try and just do this for a small group of companies, maybe once a week or whatever.
Chris, anything to add?
Excuse me?
I was going to say, Chris, do you have anything to add to that?
Well, yeah. I mean, look, what Maj just said is dead on accurate, right? So when he brings up an example of being the only person on a conference call, you can be similarly situated talking to a microcap company's investor relations. I mean, a lot of times when you talk to these companies, obviously, look, you don't want any non-public material information, but a lot of times you can get in touch with these companies very easily. A lot of times the IR representative sits at a desk that's next to the CEO, that's next to the CFO. Sometimes they'll pass the phone off to the CEO where you can actually, again, we don't want any material non-public information, but we can get color on earnings results or something that has come out, or maybe if we have a question about, a lot of times we'll ask questions about certain revenue segments, and just get a little bit more in-depth on things that have already been disclosed. The accessibility of these teams is, for the investors that take the time to look for them is astonishing. And, I know I worked at a microcap company where I literally did sit next to the CEO of the company. I mean, not in the same room, but I mean, we were right across the hall from one another. So I think the opportunity is immense. It does require a little bit of elbow grease, as Maj, kind of just said casually in passing. Yes, I think we read the press release of every microcap company that comes out. He's not joking. It's literally, I mean, there's, we have maybe a dozen of us here at the office, and that's what we do. We will, when we get up in the morning, everybody has certain news wires that they have to look at, and we comb through the news wires, and we look for not only companies that we've covered and companies that we've owned, but companies that are microcaps. And basically, I mean, we almost read every single, we definitely read the title of every single press release that goes out every day. And we almost read, the content of every one, barring ones that we know are not relevant to us. So it is a laborious process that we undertake, and I know because I live it every single day. So when Maj, mentions it kind of casually in passing, I just want to go back and say, we do spend a significant amount of time doing that. And when we're looking for these differences between the conference call and the press release, or between, a lot of these companies that are on the OTC will actually send out like a shareholder letter in lieu of sending out a press release. We try to take the shareholder letter, the 10Q or the 10K, the press release and the conference call transcript, and we'll try to, basically cross-reference all four of those items to see if there are points that have been made in one of them that haven't been made in the other ones. And then from there, maybe we go and try and contact management for a little bit more color on it or something like that. It is a relatively labor-intensive process, but, really what's cool about geo-investing, what's cool about our service for retail investors and even institutional investors is, they only get the benefit of that. They get the fruits of kind of our labor on a daily basis at, the cost of whatever, 1/10 of having an in-house analyst. So we're looking for those little nuggets. Maj looks for these, Maj calls them information arbitrage nuggets. We're looking for these things on a daily basis. And those are the kind of things that we grab onto because even within the microcap universe, there are things that may have been ignored. And that's saying something. So, Maj is spot on, but I did just, as somebody that has read a fair amount of press releases in my day, I wanted to just go back and make sure that point was not glazed over. That, we do read a lot of press releases and a lot of filings here. And it's a great place to start, man. I agree with Maj 100%.
I'm just so happy to know I'm not alone. I'm in the same boat as you guys. I read literally every single, at least the headline that goes out on a daily basis in microcaps. So now by the time I publish this interview, it's actually going to be 2019. And we've alluded to some of the trends and topics that you guys see is coming out in 2019. But I want to get a full picture here. What do you guys see as some trends or topics of interest that my audience should pay attention to for 2019? Chris, let's go back to you.
Go to Maj first.
Okay. All right. Maj, you first.
Thanks a lot. Mine's easy. I don't have a big opinion on this. It's like I can say what I hope happens. I'm hoping that stock picking becomes sexy again. That it becomes a significant part of what the market's looking to do and what investors are looking to do this year. And I'm hoping that that eventually the value that we see here is hopefully seen by many other investors out there. I don't predict them. I can't predict anything really, Bobby. That's not what I really do. But I can know that at this point in time, the value I see there in the space is a lot better than I've seen in a long time. It's kind of mouth-watering, especially when you compare with all the insider buying going on. So, not making a prediction, but I can tell you at some point that's got to matter, I believe. And who's right now? Is it the insiders buying? Or is it us, greater fool investors selling into the insiders' hands? So I'm thinking that'll play out and going into 2019. And I think that I'm curious what the lax in regulation in the financial sector, the banking sector, will mean for the market going forward. Will banks, smaller banks, start loosening up the lending standards? What does that mean for the economy? And maybe that helps the economy. I'm already seeing. I saw a few commercials already of some kind of lending companies where standards are really getting a little looser than I had seen in a long time. So maybe it's already starting to play out. So those are two things I'm looking at. Stock pickers. Will it become a stock picking market in 2019? And will banking regulation that was relaxed in 2018 play out to be a benefit to the economy and to some companies in 2000 and the consumer in 2019.
And Chris?
Yeah, I guess I have two answers. One is like an idealist, like what would I like to see, which is never going to happen. I would like to see the entire giant bubble burst and, the United States sink into hyperinflation and thus go back to the gold standard and end the Fed and end the federal income tax. Those are all things that are not going to happen that I would like to see happen. But no, from a realistic perspective, what I think is more likely, and the one thing that I think is possible that gives me a glimmer of optimism, is perhaps in the coming year, Maj is saying it becoming a stock picker's market, and I think conducive to that, perhaps in the coming year, the market starts to just get a little bit more skeptical, and, we tolerate a little less bullshit and a little less obvious fraud, and a little less obvious chicanery and, balance sheets that aren't levered, at 10 times EBITDA. Maybe we just rope in the euphoria here a little bit, slightly. I mean, please, it's been 10 years of just blind buying of anything in in just a permanent euphoria. I mean, it's been, I think it'll go down in history as a horrifying experiment in human psychology. But with that being said, what I think is possible, and what I would like to see happen, is just pull that euphoria back a little bit and just push the skepticism meter a little bit higher. It can be 90-10, but I think now it's 100-0. So.
Got it. So then, where can my audience go and find more information about each of you and geo-investing?
You can go to geoinvesting.com, and there's a Meet the Team section where you can meet some people who work at the team. Mm-hmm. And there's a service, a solutions area there where you can see the kind of retail solutions we offer to retail investors, and including model portfolios, our call to actions, and just deep dive research articles and reports.
Yeah, there's plenty of stuff on geoinvesting.com that you don't have to be a member to check out. A lot of Maj's educational content is up there, so there's plenty of stuff to kind of pour through that doesn't require any type of commitment or anything like that. So you can check out geoinvesting.com, and like Maj says, there's an about the team on there, and that covers not only me and him, but everybody else that works here as well. So that's a good spot to start.
And we do offer a free trial too, so and which I think is important to understand. Look, if I was a investor in this space and I'm looking for organic research that has a great team behind it, I mean, I would definitely. I know I founded Geo-Investing and I worked there, but I gotta say it's really a source. I think that investors who want to invest in smaller capitalized companies should check it out.
All right, guys. Well, I want to thank you both for joining me today and providing some insight on what's going on and maybe some things to look out for in 2019. And I'm excited to see you guys soon. Hopefully, we'll maybe see you in Vegas at the Planet MicroCap Showcase.
Awesome.
Excellent.
Thanks so much.
Look forward to it, man.
All right. See you guys soon. Happy New Year.
Take care. Bye-bye.
Bye.
Thank you all for tuning into the Planet MicroCap Podcast, and thank you, Maj and Chris, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@snnwire.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official microcap news source, and the Microcap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.